You're listening to Energy Insiders, a weekly update on clean energy and climate policy with Renew Economy's editor Giles Parkinson and leading energy analyst David Leach. Energy Insiders is brought to you by Evergen, providing cutting-edge energy management software for battery optimisation, virtual power plants and distributed energy resources. And Pylon, helping solar installers and retailers design high-resolution solar proposals in minutes.
Hi, it's David Leach here. Once again, I'm having to do this on my own without another episode of Energy Insiders, without the benefit of Giles, who's away again this week. So I hope he forgives me for anything that goes wrong. Fortunately, we have a terrific interview this week with someone who I greatly respect, Lauri Myllyvirta, I never pronounced that quite right, who's the lead analyst and co-founder of the Centre for Clean Air and Energy. And as you'll hear in the interview, Lauri is an absolute expert on China. And as you'll also hear in the interview, I came across him when he was working at Greenpeace and years and years ago when I was at UVS, and was so impressed with the quality of research and knowledge on China that I've kept up with him ever since. And so without further ado, here's that discussion. It's a pleasure to welcome Lauri Myllyvirta from the from the Centre of Research on Clean Energy to the podcast. Lauri's been with us before a few years ago. For listeners, that I first met Lauri, or first came across Lauri, when he was working for Greenpeace in Asia, and I was at UVS, and I didn't believe investment banking research. I thought it would be a lot better than Greenpeace research, but it turned out Lauri's research was far better than any of the stuff I was reading, and since then it's gone on to be better and better things. So thanks very much for agreeing to join the podcast, Lauri.
Thanks so much, David. Good to be here.
Now, China is our topic, and a huge topic it is too. I thought I might just start maybe by asking, where are we with China's CO2 emissions at the moment? I want to dive into electricity and cement and steel and coal, and there's any number of topics as someone that's taken interest in China for 20 years, but let's just start on the emissions side.
For sure. So as of the end of 2025, China's emissions have been stable or falling for 21 months. So the rebound from zero COVID ended in early 2024, and after that, the growth in clean energy has for the first time overtaken the average growth in power demand, and that has enabled, along with other positive trends, has enabled emissions to stabilize or even come down. And so this is the first time that this is happening without a slowdown in energy demand. So that's hugely significant.
Yes, I think electricity consumption has actually continued to grow at something like, a 4% annual pace? Would that be a reasonable kind of number?
Last year was 5.2%, while reported GDP growth was 5%. So still growing faster than the GDP.
And I guess China's got the same sort of things that are driving electricity consumption growth all over the world, namely electrification, and I guess getting a kicker now from data centers.
Those are much smaller factors than in the rest of the world. So still most of the growth in demand has come from industries, more kind of traditional industries. So economic growth over the past 5 years, since the start of the pandemic, has been heavily driven by manufacturing industries and energy intensive industries. There's a tendency to emphasize those kinds of politically desirable sectors as the drivers. So you will find a lot of people attributing the growth in demand mainly to EV charging or data centers or whatnot. But if you do the numbers, those are a factor, but still a smaller a part of the story. And even the IEA listed data centers, but I think that was their comms just picking up the juiciest bit. So there's a lot of hype getting ahead of the real impact from data centers.
I think it's very interesting myself. It's what we analysts do is try and sort through what's hype, what will happen from what is happening and has happened. One of the things I looked at when I was going through the data in preparation for this, and as an ex-building materials analyst, that really fascinated me, was to see that cement consumption in China has peaked way back in 2014 at about 2.4 million tonnes per year, and now it's down to about 1.8 million tonnes. I mean, that's at 0.8 tonnes of CO2 per tonne of cement. That's about nearly 600 million tonnes of carbon reductions, more than all of Australia. But that's certainly quite a trend and shows a shift in China's economy all by itself from construction led to something else. Sorry, I'm talking a lot.
No, absolutely. That's a huge story in itself. So there was, of course, this enormous surge in cement consumption, especially during the stimulus around 2010, and then the first slowdown around 2015. Then cement use started climbing again and peaked again in 2021. And so that shift that happened around 2020, 2021, when real estate peaked, is the key to a lot of the things that are happening in China right now. So the government clamped down on excessive debt, excessive risk taking in the real estate sector, which had been a major driver of both China's emissions and economy over the past 2 decades, or the preceding 2 decades, and that led to a contraction in real estate construction that goes on until today, and that has resulted in a major drop in cement consumption, also a drop in steel consumption, and the impact of that drop in steel consumption hasn't really even been seen in emissions, because there is still a structural shift that needs to take place in the steel sector. But it's a smaller drop in
steel, I think, only down about 7%, or that order. Although steel uses about 2 tons of emits about 2 tons of CO2 per ton of steel. So it would be good if, from a carbon perspective, if steel production dropped a lot more, or we moved to a new way of making steel, which I would love to discuss, but not now. There's too much else to go through. Nevertheless, as a result of the downturn in, perhaps as a result or for one reason or another, China's economy is shifting away from a very heavy construction-related one. I think at its peak, construction was something like, well into double digits, probably closer to 20% of GDP. To now, I think you wrote an article for Carbon Brief that was showing that, in fact, what we call new industries, electrification-related industries, EVs, batteries, solar, wind, is perhaps responsible for as much as 20% of, did you see a significant share of GDP itself, and about a third of last year's growth?
That's right. So in 2024, we estimate that the clean energy sectors, broadly understood, made up more than 10% of overall GDP for the first time, and it climbed to more than 11% last year, and delivered more than a third of the growth overall. So I think that the one way to put this is that China had a target of around 5% GDP growth last year, which was not so surprisingly met to the first decimal.
Year.
Yes, but so without the contribution from these clean energy industries, GDP number would have been around 3.5%. So clean energy is now a huge part of China's economic growth and economic model.
There's a huge amount of areas we could dive into, but I suppose we should look forward. One of the best podcasts I ever heard on China ended up with this comment that the future is absolutely certain in China. The only uncertain thing is the past. But I haven't found it so myself. I mean, the China central government makes policies which it then either tries to enforce or doesn't, and provinces have their own kind of stuff. What's your understanding of the state of play now? We've got like emissions schemes, we've got overall goals, absolute emissions, but to start falling. But from what year is kind of left fine?
I think it's absolutely right to note that a lot of things don't just follow a predetermined script. There's a lot of history writing that basically fits everything into a neat narrative exposed. But so over the past 5 years, China's clean energy growth has far exceeded the government's targets. So this was really something where provinces, state-owned enterprises, even private investors drove growth far beyond what the government was targeting, whether you look at solar or energy storage or EVs. On the other hand, the energy consumption growth in the 2020 to 2023 period was also way ahead of what the government had anticipated, and way ahead of the targets in the 5-year plan. And as a result, China ended up missing the carbon intensity goal for 2025 by a big margin. And this was a key goal in the 5-year plan. It's also the carbon intensity is also the key metric in China's 2030 international climate commitment, and now they're severely off track to that. So there are certainly a lot of things that didn't go according to the script. And now still the hope for the next 5 years is that clean energy will continue to significantly overperform the government's targets, and that's in fact the only way that China is going to meet its 2030 climate commitment.
I guess we always start with electricity, but let's look into it a little more. The thing about China is that whatever position you support, you can find something in China to support that position, and sorting out the underlying stuff is quite difficult. I mean, obviously there's a lot of new coal generation being built. The coal utilisation hours have actually remained relatively stable. I could go on and talk about coal production and the pressure on the actual coal mining side of things, where I think costs are rising and the quality of the coal is falling, and yet the coal price isn't rising, it's actually gone down. So eventually that pressure has to tell on the millions of people employed in coal mining, but maybe we can come back to that. As far as the electricity side of things goes, we're building, even with all the growth in electricity consumption, we're building a lot of too much electricity capacity, aren't we, really? And it's the same fight we see in every country as to which capacity is going to win. What's your views on that, and what are the policies around that?
So the background is that China had electricity shortages in 2020 to 2022. These were the underlying factor in this was that coal prices were going up. The government wanted to lower or prevent electricity prices from going up to stimulate manufacturing during the pandemic, and so then they ended up in a situation where it was unprofitable for coal plants to operate, and a lot of plants called in sick. Either they failed to buy the coal that they needed to run, or then they said that, oops, we're out of order today. And so that led to shortages. But then the policy response to that was really all of the above. expand coal mining, expand coal-fired power capacity, very importantly, expand energy storage capacity, and carry out the grid and pricing reforms that address the root cause of this issue. So besides this pricing issue, the other factor was that China's electricity grid was and still is operating in a very rigid way. So some of the worst episodes of shortage, the regions or provinces that were experiencing a shortage and were rationing electricity locally were still exporting to the rest of China, because those transmission lines run on schedules. They don't run based on the actual market conditions. And these kinds of rigidities create the need for vast amounts of capacity that would be redundant in a well-functioning electricity system. And so that's the reason why there is a perceived need for a thermal power capacity. Even if you do the numbers on the national level, it looks like China has way too much. So that's how the expansion got started, and now the government has created capacity payments to coal plants to make it attractive, or at least palatable for power companies to develop new coal plants and so on. And there's so last year, 80 gigawatts of new coal was added to the grid, a big increase, and that did mean that utilization fell because generation fell and capacity went up by that much. And then there's another 290 gigawatts under construction. And so if you go with the current trend where clean energy additions cover the growth in demand, and you add this 25% additional capacity, then utilization goes down by 25%, which is going to be highly problematic for financially and so on.
And in fact won't happen. Whatever happens, average utilization is not going to go down 25%, because what will happen is that if nothing else changes, they'll just close a lot of plants and keep, that's the way it works. But before we get on to that, let's just talk about the outlook for the renewables and the battery side of things, which is what everyone loves to talk about, including me. Obviously China's built, you can run through the numbers that will make your eyes roll about the new solar and the new wind and the new batteries. But I think there's also been some changes in policy support and stuff. And it would be interesting to talk about your expectations for the next year or two.
For sure. So last year, China added 315 gigawatts of solar and 115 gigawatts of new wind.
115 of wind. I think from my memory, the previous record was about 70 or 80. That's a big number, isn't it? Really?
Yeah, absolutely. These are very big numbers. So if you do the math, the clean energy capacity added last year will generate almost 700 terawatt hours of electricity. So that's Germany and Poland put together, or enough to cover electricity demand growth up to 6-point-something percent.
Can I just pause there, because on the solar, I think a lot of the official statistics, the IEA and even China's own stats bureau, how do they deal with the behind the meter or ground mounted or non-utility stuff? I'm not sure what the right word is for China, and how do you deal with it?
Right. So China has a couple of different numbers. The annual numbers that come out in the statistical communique, which is a big annual statistics release, covers all generation from wind and from solar. But so China has this monthly reporting that is based on that is industrial production statistics. So the point of this is tracking added value in industry. It was never meant as energy statistics, but it just happens to be the only thing available. And it only includes industrial firms up to a certain annual turnover. there are two problems with that. That it excludes small installations, not just behind the meter, but also small utility installations. And because you're basing it on annual turnover, you have trouble with a lot of new firms coming onto the market. So this reporting misses out on half of all solar generation in China, and it also misses out on half of the growth in wind, because a lot of the growth comes from new firms entering the market. So that has led to a lot of confusion and people saying that, oh, this capacity isn't generating much at all because people have compared apples and oranges. I don't know what the IEA does on a monthly basis. On an annual basis, they do put out numbers in their energy balances and so on that cover all of this.
I shouldn't waste our audience's time, but I actually run a website where I update the IEA monthly numbers pretty regularly and turn it in, and shows that China has about 20% on a annualized monthly kind of basis of VRE, variable renewable energy, wind and solar combined. But you're telling me, you don't know, but it's quite likely that might miss some of the wind and solar data.
So I don't use the IEA data because of the latency. So what we do is we get monthly numbers on wind and solar capacity and average utilization from the China Electricity Council. So they do a survey of utilization across the fleet, and we put those two numbers together to get monthly generation.
And so what would you say the renewable percentage is roughly at the moment then?
Wind and solar, we're about 22% in 2025. And then putting nuclear and hydro and a bit of biomass on top. I don't have the exact number off the top of my head, but it's getting to more than 40%.
That sounds roughly the same as the IEA numbers. So even though mine lag a few months, that's an easy thing. Anyway, we've got way off topic. Now we're looking forward. There's been policy reforms. We know we've got a lot of new coal generation being built, but we're also going to have some amount of new wind and solar. The total will be a lot more than what's needed, most likely.
Yeah, absolutely. So what happened last year, besides these huge capacity additions, is a big change to how new wind and solar generators are compensated. So up to May last year, they got what is known as the coal benchmark price in each province. So that's the benchmark for how much coal plants used to be paid. So in that sense, it wasn't a subsidy, but it was a guaranteed price equal to the cost of coal-fired generation. Now what that was replaced by is an auction system where there's a quota for each province for how much wind and solar they should be getting onto the grid, and they put out an auction with contracts for difference, plus which cover not all of the generation from the wind and solar, but most of it, and then the rest from those plants, and then plants that don't qualify in the auction get sold to the medium and long-term market. So generally they have to make annual contracts, and that's created quite a bit of uncertainty, of course, for the industry, because the whole electricity market system is pretty novel. It's quite shallow in most provinces. The rules for the market are still being adjusted and fine-tuned, and so on. So generally what we've seen is the prices have more or less converged with the spot prices that you would expect to get. So the capture prices for wind and solar, which has been quite good for wind, but for solar you get into the issue of because the spot market,
a familiar issue.
Yeah, but so what I do want to highlight is that so the general issue is that of course solar is very correlated. So during the day you get low electricity prices, but if you look at the penetration in China, the amount of solar that you have in China, that shouldn't be happening yet. It's only happening because the spot market is shallow, because most coal-fired power is sold outside of the spot market, and the coal plants are not flexing during the day the way that they should. So when you're at 10% solar, you shouldn't be getting low or negative prices yet during the day. It should be happening when you hit 20 or 30%. So there's a lot of there's this issue that basically wind and solar is being exposed to the market a lot faster than coal is, and that's creating.
That's traditional, isn't it? That's always been the case in Lauri. I mean, in China, like the coal is the incumbent and the kind of has the political voice, if you like, or so it has historically. And we used to talk about wind curtailment, and I guess I want to come on to transmission, but I want to mention that when I was researching this, just for our Australian audience, that you look at the on-grid price that the big state-owned generators are getting, and when you work it through to Australian dollars, it comes to something like, as a round number, 100 Australian dollars, not that actually different to the China's price, to the Australian price. So you might think that China's not particularly cheap or expensive on a global basis for electricity. But let's talk a little bit now about curtailment and transmission, because I think the usual problem with renewable energy is it's not built where the demand is. But China's also got a policy for new industrial parks where they want 30%, I think, or something like that, of the energy requirement of an industrial park to come from something that's built right within the park.
So for about a year, zero carbon industrial parks have been a huge buzzword, and now there's a target of having 100 of them in place, out of which the first 50-something have already been identified. And so this is going to be a combination of on-site clean generation, direct purchase through the grid, and or using certificates, and that's quite significant because industrial parks are a huge part of China's overall energy consumption. I found a number that put the share at 1/3. So that's highly significant, and also pioneering new models. So whether it's virtual power plants that are coupling thermal generation, batteries, and renewables, or these direct purchase models. Overall, the new policy for wind and solar means that there's just going to be a lot of testing out different business models. So of course, solar with storage is the most obvious one, but a lot of different ones. And I do have to say, a lot of the solar capacity in China has already been built next to on-site consumption. So last year and even the year before, industrial captive solar was a big growth segment, and overall industrial and commercial has been bigger than households.
As it historically, it wasn't unusual to have aluminium smelters, Chalco or whatever, that would have coal mines and coal generators, built right next door as well. It's just a shift in the fuel, not necessarily from that perspective a shift in the strategy. But talk to me a little bit about the transmission system as well, because it's obviously you can't just build. Well, maybe it's not obvious. You can move the industrial park to where the wind is, but you can't move the wind to where the industrial park is.
So China, of course, has, in theory, two national grids, but in reality, it's very fragmented. So the provincial grids still tend to be the main area where things happen, and everything that has happens across provinces has quite a lot of friction in it. There has been progress. So last summer was the first time that the officials were highlighting that across province transmission is actually helping China cover the summertime peak loads. The thing that then has been happening as a bit of a bolt on top is these long distance transmission lines. So long is doing a lot of work here. It's very long, so basically from western and northern China to the demand centers on the coast, and so these are lines that are directly built and operated by us, the national state grid, and so that's why they like them. Anything that spans across different grid regions. It's a pretty rigid model, so basically it's building dedicated power generation at the sending end of the line, and then it's treated as a must run at the other end of the line, and much of this still runs on schedule, which then means that you have a combination of coal and wind and or solar to meet that schedule, and that puts limits on the share of clean that you can ship through the lines. But they've been making it more flexible, at least adopting the schedules to solar, which is quite predictable. So there was a line in a press conference where one of the officials said that the solar in the far west of China in Xinjiang is helping meet the evening peak in the east. That 2 or 3 hour time difference does wonders.
It does, and those would be, I presume, ultra high voltage DC lines. I guess the difficulty with those, as you say, they're point to point. It's not that easy to connect in along the route. Maybe we'll talk about that some more if we get an opportunity. But I still haven't quite worked out in my head what the outlook is. I mean, consumption might continue to grow at 5%, perhaps, but that's a big number that can't be sustained indefinitely, I don't think. And it's still not clear to me. There's going to be some losers out of it. How's it going to play out in your mind for the next 3 or 4 years?
For sure. So the wind industry is optimistic. They expect to be able to sustain about 100 gigawatts. As said, they've gotten good prices out of the auctions. So far, there's much more offshore wind coming on as well, which then helps with a lot of things. So wind is looking good. Nuclear has done well in terms of construction starts. Not about exactly 10 reactors approved each year since 2022. So those projects will start to come online over the next 5 years and make a contribution. Solar is the big question mark, but I expect that there will still be ambitious centralized plans in the 5-year plans of many provinces, which will be coming out next year, and many state-owned enterprises. Provinces have a lot of control over the contracting in the provincial grid. So if you make a huge solar farm a priority project, then the grid operator will make sure to come up with a contract for it. So then it leaves the distributed part of the solar build out, which has been about half, and there it's going to take innovation, testing out new business models, and what helps a lot is the major drop in the cost of storage. So that will then help those plants secure contracts. I also think that green hydrogen will take off quite a bit faster than expected. But so that will support the solar. Yeah, that will support the solar build out as well. So we don't do quantitative forecasts of our own, but if you look at the forecasts from China, the expectation is that there will be a bit of a dip in capacity additions this year, and then it will start picking up again from there, and so probably going closer to 200 gigawatts this year, hopefully above that, and then climbing back up to towards 300 towards the end of the decade. And so if you put those things together, that should be enough to cover the expected electricity demand growth at about 5%.
And so what would all these new coal plants do then?
They would see their utilization drop. So to be clear, the plan for everyone's expectation is that utilization will drop. It's just a question of how much. And I think that 25% drop over the next 3 years is more than the operators are willing to stomach. So then that would lead to a clampdown on new projects first, and then possibly starting to retire the older projects. And this is really a replay of what happened 10 years ago. So it's nothing new.
It's nothing new, and we were all optimistic 10 years ago incorrectly. So which brings me on to one of the things that make the coal plants so important in China is, as we said, the coal mining industry. The numbers, again, are always startling in China, but I think China's coal consumption has gone up. Coal production has gone up to close to 5 billion tonnes, very close. And if you add on imports, it's about 5.2 billion tonnes or something like that. Which for those that follow this stuff, some of it is like coking coal for steel, which I'm not that interested in at the moment, and the rest is thermal coal. I guess there are a lot of things about it to say, like the coal. It's, when you've got that much coal, like 5 billion tonnes, and the coal mines quality, like the mines get old and then they have to be closed. You've got to build so many new mines every year just to stand still. I think I worked the number out at about 250 million tonnes of new mines every single year. But the coal quality has been going down, like the gigajoules per tonne is falling off. They're not washing as much coal. But over and beyond all of that is the huge employment in the sector. It's really very difficult for China to move away from such a basic industry. Is it or isn't it?
I really don't buy that argument. If you look at the past 10 years, employment in coal mining has halved or more because of mechanization. And also, besides that, the employment has moved across the country. So a lot of mines have been shuttered in provinces that are not designated as the key producers, and the production has been moving to other places. So certainly, locally, if you look at individual cities in Shanxi, it's a major issue. But for the country as a whole, it certainly isn't. If you look at other things that happened, like the huge drop in construction employment, no one, of course, people noticed, but it wasn't. It wasn't a showstopper.
No national tragedy.
Not a national tragedy, individual tragedy, to be sure. And overall, China's going into a labor shortage rather than a situation of excess labor. So if you're an economic planner, I think freeing up people from working in the mines to do work in the industries of the future is going to be a good thing.
And so there's no real reason not to think that coal mining as an industry will decline, as it has done in so many other places, whether it's Virginia or Spain or Wales. I mean, this is not an unusual transition in an economy from that perspective. And as the coal mining declines, I mean, will that make the coal more expensive? I mean, as I said, the quality of the coal is quite an issue in China, and in any case, it's more expensive than Indonesian coal by a long way.
My expectation is that over the next few years, we're going into an overall fossil fuel glut. So there was a huge wave of investment in, especially oil and gas, also coal, when prices spiked in the first years of the decade. And demand is going down. So I think it's going to be a glut, and then China's going to have to go back to shoring up coal price by limiting output at mines or setting for prices and so on, and probably working to reduce imports as a part of that. Of course, you can ask later on when the industry is in firm decline, maybe the picture will look different, but for the next years it's going to be much more keeping those producers afloat that you want to stay in business.
I know a lot of the audience are interested in batteries, and I will ask one thing about batteries in a while. But first, from an overall economy and even global perspective, China's place in oil consumption is very important. They've been a source of a lot of the growth in oil consumption historically. And I guess with the electrification of transport, and I think you wrote a great article showing how it's happening not just in passenger cars, but also in trucks and in buses and things like that. And even in the rail industry, it's likely, what's going to happen to oil consumption in China? Is it going to keep growing, do you think? Someone I talked to about this said that if you measured it per capita, China's oil consumption was very low to the United States, so of course it would have to keep growing. But I said I wasn't all that confident about that.
Yeah, no, the US is really not a great benchmark for Asian countries. I think looking at Japan or Korea would make a lot more sense given urban density and everything else. What's been happening in China is that oil consumption in transportation has been coming down since early 2024, and electrification, as you said, both in passenger cars and now increasingly in heavy vehicles as well, is bringing that down. Even Chinese oil refiners and so on have said that the use of consumption of traditional oil products has already peaked. But in the past few years, that has been offset by huge growth in the petrochemical industry, especially plastics production. So there's growth in demand in the domestic market, there's export growth, and there's also import substitution. So China used to be the biggest importer of ethylene from the US, and there was a plan and already underway to replace that, and then that got sped up by whatever Trump did last year. So that resulted in a big...
Which day last year?
Yeah, I don't know what to call it, so I suppose everyone can figure out what I mean. All of that has just meant that overall oil consumption has still been inching up, but now there is highly likely there's going to be a target in the upcoming 5-year plan to peak oil consumption overall this year, with the idea that petrochem will still grow, but at a lower rate, and transport oil consumption will be coming down.
That's great. So 2 little questions. One, I hope very easy. When will this 5-year plan actually be announced, do you expect, roughly?
Early March.
And the second one, I do have to ask about batteries. China is obviously the biggest producer, but also the biggest consumer, it seems, of at least stationary batteries, and I guess batteries for electrified transport. The car subsidy arrangements have also changed, I think, this January, and where I was looking, a number of EV manufacturers reported January sales down about 30% or something like that, but you can't take any notice of January Chinese data, I don't believe, anyway. So what's the outlook, I guess, for battery consumption, stationary battery consumption in China? And if you had any thoughts about the scope for ongoing cost reduction, I'm anxious to hear them, but I guess everyone's got a view about that.
So in terms of energy storage batteries, last year was of course huge. Almost 70 gigawatts of battery storage capacity installed, 75 gigawatts of energy storage overall when you include pumped hydro. And this is the first year that the growth in energy storage capacity overtook the growth in peak load, both last year's growth and the average growth. So that is a bit of an inflection point that gives China the ability to manage rising peak loads without increasing fossil fuel-based power capacity, if it so chooses. In terms of cost reductions, I don't know. The current policy is shoring up costs so that the producers can be somewhat profitable. I think stabilizing prices rather than further cost reductions are likely, but it's just the fact that if the current cost reductions really haven't worked their way through to investment decisions yet. So if you do the math on the competitiveness of solar plus storage at the current prices, then you just need to get to work and deploy and not worry about whether costs are going to come down further.
Great, Lauri. I guess your centre that you have established is really a leading source of information, I think, about air quality and pollution. And I also want to mention your chart that you update about imports of thermal fuels from Russia and how they're declining, which was a great chart I was looking at today. Are there any closing thoughts or things that you would like to leave our listeners?
One thing that I do want to say is recently I've been getting the sense that what happens in China is incredibly important, and of course in terms of absolute numbers it's the biggest market for everything. But I think there's my personal resolution for this year is to do a lot more to highlight what's happening on clean energy outside of China. I think that's still the underappreciated story in terms of how much that's going to bend the curve on fossil fuels and CO2 over the next years.
I agree with that. It's the breadth, and so many countries are doing so much now underneath it all, and we talk an awful lot about Trump, and the US is very down on Europe, but I have to say, from where I sit in Australia, from my own persuasion, Europe's a leader and a role model that we could all learn a lot from, and as a collection of middle powers that learnt to live together over thousands of years. Anyway, that could extend this podcast by a long way, and everyone would be asleep. I just want to say thanks very much, Lauri, for agreeing to join Energy Insiders, but it's been a great discussion, and I do hope we can do it again in the not too distant future.
Thanks so much, David. Thanks for the great chat.
G'day, Alex Carey here. The GoodWe ESA all-in-one home storage solution is here, and it's a game changer. It's packed with market-leading features, full home backup and 6-level battery protection. With up to 48 kilowatt hours in a single stack, the ESA is a breeze to install with no gateway needed. The GoodWe ESA series is available now and priced to cover the 2026 drop in the rebate. Visit goodwe.com.au for more information.
Energy Networks Australia invites you to be in the room where the future of energy networks is being shaped. Join us at the Energy Networks Conference and Exhibition 2026, March 17 to 19 at the Adelaide Convention Centre. EN26 brings together over 1,250 industry leaders, decision makers and innovators for 3 days of big conversations. From infrastructure delivery and system resilience to market reform, emerging technology, and of course, trust, communities and an energy transition that serves all. If you work in energy, this is the event you can't afford to miss. Register now at www.energynetworksconference.com.au.
And that was Lauri Myllyvirta. And of course, China is the most interesting and most important place in the world. As Lauri said, it's not the only place in the world, though. And I myself published a little article looking at this week, looking at what was happening to renewable energy all around the world, and as well as the fact that overall renewable energy is capturing all the growth in electricity supply, even though actual coal generation has yet to shrink in any meaningful way. All the growth, including the growth that must eventually go to data centres, is being captured by renewable energy. But the thing about it is, it's not just that it's happening in China, it's the breadth. It's happening in every single country. About the only country where coal generation increased last year, in the last 12 months, was in fact the United States, and that was very marginal. And I don't want to be too critical of the United States, because when you look down at Texas, which is where most of their growth is coming from, it's all solar at the moment. That's the majority of that growth. So that's that topic, and we hope to keep following China fairly closely. Back here in Australia, it's always people that make things happen, and it's interesting to note that John Grimes, after I think about 18 years, is moving on from the Smart Energy Council to what he says is an associated group that will focus on clean energy in Asia more broadly than just Australia. And of course, John's been on this podcast a couple of times. I think he can take a lot of credit for the home batteries program, and in general is, as the Renew Economy article suggests, one of the absolute legends of the industry. And let's hope we hear lots more from him going forward. In other news of the week, or other things that are interesting to me, spot electricity prices in every single region have been at $80 or less on average for the last 90 days now even, and show we're already in a period where solar energy is declining quite sharply. We're going into the period where thermal energy tends to get more pricing opportunities, and yet prices are still remaining very manageable. So that's great, and partly explained, I think, by having more batteries in the system all the time. My own dashboard battery meter goes up to about 10 gigawatt hours every evening, and then comes down in the morning and in the early evening before getting charged back up again in the middle of the day. So the scale on that battery meter keeps expanding. That is, in a month or two, it'll be more than 10 gigawatt hours, I'm sure. Also this week, we had a couple of solar farms that commissioned, and a couple of batteries that went with them. So there is still some stuff going on. And also quite interesting to me, although it's only one step in a long process, is that public hearings were called for 3 of the big wind farms in New South Wales. That's Dinawan, which is about 350 megawatts in the southwest of the state, out Balranald Way. That's only stage 1. There's another 600 megawatts sitting behind that a bit further west. And then the Bullawa one, 750 megawatts, also IPC public hearing. And so when you get those public hearings, you're well on the, I shouldn't say that, it depends on the result of the hearing, but it's likely, based on previous experience, that most things that go to a IPC public hearing end up getting approved a bit later, as I certainly expect those 2 wind farms will be approved through the New South Wales process. And then perhaps the third one that's also going through the same process and now at the IPC hearing, and which I guess is going to prove to be the most controversial because it's in New England, near Walker, is the somewhat famous Winterbourne wind farm, which, as I say, has reached the same IPC public hearing stage. That's 732 megawatts. I have to say that even though there is an existing wind farm at Glen Innes, about which, as far as I know, no one's ever had a single complaint that's made the news, and operates perfectly satisfactorily and does well for the Glen Innes region. And despite the Uralla solar farm, which has also been a big success, stage 2's a success, Uralla's booming. The Uralla solar farm's got a battery going on now, just about to commission. Despite that, there is, of course, still a fantastic amount of opposition to wind in New England and to transmission in New England. And so this Winterbourne IPC hearing could be a somewhat steamy affair, even if it doesn't quite get up to the, some of the things that, like, Pauline Hanson might want to talk about. So I'll be keeping an eye on that with some interest. Really, I don't, another sort of debate that I think everyone's trying to pay attention to, and that I mentioned last week, and I'm sure is going to come up for mention again, is the AEMC review into how networks charge. The fundamental problem that everyone tackling this debate faces is that in the end, the networks are entitled to a fixed amount of revenue each year. All we're trying to do, or all the AEMC is really at liberty to do, and this has a much, much deeper look at the thing, and beyond, I think, even the AEMC's powers, all the AEMC can do is really change the distribution of the revenue between one group of people who pay and another group who pay. Historically, we've always wanted to make people who consume a lot of electricity through the network end up paying. So the usage charge has been the prime component of the bills. But as time has gone on and people have put more solar in and now more batteries, what we're finding is that those people, and I include myself in that number, in fact don't use the wires and poles, the distribution network, very much. And so the burden of paying for it has fallen back essentially on those people who don't have solar. And that's, typically a different group of people, people who live in units, for instance. And so the AMC has been trying to think of whether that's a fair thing, and it tends to see that the network is essentially a fixed cost. That's something I agree with, and that therefore it should be paid for via a fixed annual charge, or that should be the biggest thing, and that usage of the system should be not emphasised as much. And now that's where it gets very debatable, because although it will benefit people in units who have money but don't have solar, it will also, increasing the fixed costs, will disproportionately hurt people who have to be connected to the electricity but can't really afford it very easily. And so they'll have to pay a bigger share of the network than they would have in the old days before solar came along, but maybe a lesser share than they would in the new solar and battery world, if that makes sense. In the end, though, the essential problem in a lot of ways is that the network throughput is, I think, going to be less utilised in the future. That hasn't really shown up yet. So the actual value of the network, if you're not using it very often, is it really worth as much as it used to be when we all needed it every day, every time we consumed electricity? Or should the entire valuation of the network be reviewed a bit before we get to how we actually pay for it? But I think that's kind of a metaphysical kind of problem that's not going to be solved in this current review. And I think that's the majority of what's going on at the moment. I'd like to say thanks myself to our sponsors, Evergen and Pylon. Very grateful for that sponsorship. Two great sets of products. As some regular listeners will know, I'm an Evergen user myself. And that's it from me this week. Giles will be back again next week with another exciting episode of Energy Insiders.
Energy Insiders was brought to you by Evergen, the market-leading renewable energy software business that optimises residential and commercial solar and battery systems. Evergen enables large numbers of systems to operate as a single fleet, so network operators can use them as a virtual power plant, generating significant value for consumers, network operators and the energy system as a whole. Evergen software is powering the energy system of the future. Energy Insiders was also brought to you by Pylon. Pylon provides easy-to-use solar design software for installers and retailers with pay-as-you-go pricing, no monthly cost and no lock-in contracts. Join Australia's top solar companies who trust Pylon to design high-resolution, CEC-ready solar proposals.